All right, great. And so just want to share with you guys a few minutes, the reason why I love the stock market, specifically trading options, and the reason why, I don't keep a significant amount of money in the bank. Of course, I keep some money in the bank to pay my bills and for other transactional purposes. But anything beyond that, I don't use banks at all. And the reason being is because we're looking at the website here, bankrate.com, and these rates are considered the best high yield savings accounts for the month of September of 2022. So as you can see here, UFB Direct, I've never heard of this bank before. It could just be a online bank, or they may have a brick and mortar. I'm not sure. They could have both. But nevertheless, they are offering, a high yield savings account of 2.85%. So you're talking about, so if you put $10,000 into a savings account with UFB Direct, at the end of the year, you will get an interest $285 on your 10 grand. So now let's juxtapose that with the stock market, right? So the reason why I love the stock market, so here is Roku, just pull up my pointer here. So Roku is a underlying that I trade quite often. And the reason being is because I'm familiar with how the price of Roku, I'm familiar with the movement of Roku's price. And I also like the stock itself, right? I know a lot of people. I have a lot of friends in my social circle who actually use, the Roku product, right, to stream from various different streaming services. Whether it be Netflix, Disney, etc. So all those streaming services you can get through Roku, and so I know quite a few folks who utilize Roku, right? So because of the extreme fear in the market right now, let's just look at it. So if we look at the CNN Fear and Greed Index, we can see that there's a lot of fear in the market right now. There's extreme fear in the market right now, and so as a result, the premiums that one can receive for selling option contracts is really significant at this particular time, right? So for example, if you wanted to, if you did some research on Roku and decided that you would not mind owning at least 100 shares of Roku stock, then you can come to your stock brokerage account, and you can agree to buy 100 shares of Roku at the price point of $56 per share, right? So you can sell a put option. You can sell this put option here at the strike price of 56, and you would immediately receive $515, right? So that's roughly 10% on your invested capital. So you have to have at least $5,600 in your stock brokerage account to sell this put option contract that's going to pay you $520, right, for agreeing to buy 100 shares of Roku at the price point of $56 per share, right? But you're going to get paid for making that agreement. So you're going to get paid roughly 10% on your capital that you're setting aside in your stock brokerage account in the event that the price of Roku, right? So the price right now is $58.32, and it's conveyed by this circle here. So if this circle is below your strike price of 56 when your option contract expires on October the 28th at 4 p.m. Eastern Standard Time, if it's below that, right, if the price is below your strike price, then you're going to be put 100 shares of Roku stock at $56 per share. But remember, you actually receive money, $520 in this case. So the premium is constantly, oscillating here because the market is open. But you're going to receive, roughly $530 for selling that put option contract, for agreeing to buy 100 shares of Roku at a share price of $56 per share. So really, you're getting a discount, because if you subtract, $530 from $5,600, that's going to be your actual cost basis, right? For agreeing to buy those 100 shares. But my point is, when you juxtapose the fact that you can get, close to 10% on your money in only 31 days versus waiting for an entire year, right? To get, for example, if you deposit $10,000 into the UFB Direct Bank that I showed you on the bankrate.com website, you're gonna wait for a whole year to get $285. So there's really no comparison. That's the reason why, I don't keep a lot of money in the bank, because I use options to get these really inflated returns on my money. And so what if the price of Roku stays above your strike price on October the 28th when the market closes? Well, guess what? Your position will expire worthless. The $5,600 that was set aside in your brokerage account will be released, and it goes back into your account. And so what you can do is you can do this all over again. You can continue to sell put option contracts. They consider cash secured puts, right? So your put is secured by the cash that you have in your stockbroker's account in case you are put the 100 shares, right? So every option contract you sell, every put option contract you sell, controls 100 shares. So you can continue to do this, every 30 days and get whatever is being offered as a premium for selling, a put option contract on Roku at a specific strike price. Now, here's the other thing you might want to consider, right? And here's the other beauty about knowing how to trade options. So if on the day, when October the 28th comes, let's say you sold this put option at the strike price of 56, and you took in $530, and let's say on October the 28th, the price of Roku is below your strike price. Let's say the price of Roku is at 55, 54. Well, that's below 56, right? And so when the market closes on October the 28th, you're going to be put 100 shares of Roku at $56 per share. But again, you took in $530. So what you can do is you can turn around and sell and do what they call a covered call option. You can sell a covered call option. Now that you own 100 shares of Roku, you can turn around and sell a covered call option and take in more money, right? And so what you are agreeing to when you sell a call option is you are agreeing to sell your 100 shares of Roku at whatever strike price you select. So ideally, if you're put the stock at $56 per share, then on the call side, right, you wanna agree to sell your shares at a higher strike price. Make sense? Because not only are you gonna make money from selling the call option, but you'll also make money if the price of Roku is above your strike price on whatever day the expiration date is. So if you're selling a cash covered call, right, and if Roku is above your strike price, let's say $61, let's say it's $61.05. On the day that your call option expires, then your 100 shares of Roku are going to be called away, right? But nevertheless, you're going to get. Not only are you going to get the premium or the credit that you receive for selling the cash covered call, You're also going to get the difference between the strike price in which you would put the stock, so 56, and the strike price in which the stock was called away from you. So that's a $5 difference, right? So that's an extra, $5 per share. So that would be $500 that you would receive for having your 100 shares of Roku called away from you at a share price of $61 per share. And oh, by the way, you also took in credit for selling that cash covered call. So hopefully that made sense. And again, it's the reason why I love the stock market. Specifically, I love options trading. And it's the reason why, I don't keep a lot of money in the bank, anything beyond what I use for paying my bills. Other than that, I'm trading options. I'm also investing in other places, other places for example, like crypto. So hopefully you learned something from that. If you did, definitely please subscribe to the channel, hit the like button, and also hit the notification bell so that you can be aware of when I post new videos.